reaction, but how will all of these overnight cues impact our own markets? Our research team is joining in with how the trade setup looks like and the stocks that are likely to be in the news today. First up, Vinny is joining in to get all the market cues we need to watch out for. Vinny, good morning. It was a week to forget, but what's the setup looking like this morning?
Surely it was a week to forget, more like the month to forget as well. It has not been an exciting month for the markets. Now, when you're looking at it just for the week gone by, Nifty fell on Friday itself. When you look at it, it's fallen almost 400 points. It closed below the 22,200 levels on Friday. Nifty levels that now everyone is watching out for is at 21,800 level. Will it, manage to hold on to those levels? Will it see a fall? What are we watching out for is going to be key. Now, for Friday, we saw top losers coming in from some of these IT names. So, Techem, Wipro saw a fall. Other than that, IndusInd Bank also was among the top losers for the Nifty 50. And mid and small cap, that saw a sharper sell-off coming in on Friday. Nifty mid cap down 2.5%, small cap down almost 3%. So that was seeing some bit of an intensified sell-off coming in on the broader markets. Nifty Bank on Friday itself outperformed the Nifty 50, but that also closed in the red. They're keeping an eye out on the level over there. Is 48,000 is one should watch out for the Nifty Bank. Now, FIIs and DIIs, when you look at it, FIIs continue to sell even on Friday. 11,639 crores is what was the selling coming in. DII buying was more than the FI selling. So DI has bought around 12,309 crore rupees. And this is despite those rejigs that we saw in coming in for MSCI, the flows on that front. FIIs continue to sell. What are we watching out for today in terms of a reaction for the Indian market? So the GDP data that came out on Friday came in line with expectations. So yes, that's what we were watching out for, around 6.2%. That was the Indian GDP data that came in. Auto sales numbers, we'll see some reactions coming in on that front for the month of February for auto companies. Trump tariff data's update on that front across the globe. Everyone's waiting for more clarity on that one, as well as Trump, as well as Zelensky, the clash that happened over the weekend. Keep an eye out on any updates coming in on there.
That is the key event to watch out for. Vinny, thanks a lot for that. Over to Vamakshi now. List out the stocks you need to keep an eye out for today. Vamakshi, good morning. What's on the list?
Well, good morning, Hormas. Let me first start off with the February auto sales data. Escorts Kubota saw its tractor sales go up by almost 11.4%. M&M's total auto sales, on the other hand, was up nearly 14.8%. This is better than what the street was expecting. Maruti Suzuki's total sales saw a marginal uptick of almost 1%. This is slightly below what the street was expecting. Tata Motors, on the other hand, the sales saw a decline of almost 4.6%, came in below the street expectations. SML Isuzu's total sales were up nearly 27.5%. And on account of Eicher Motors, the total Royal Enfield sales was up nearly 19.4%. This is above expectations. For TVS Motors as well, the sales were above expectations, seeing an uptick of almost 10%. AB Real Estate is another counter that we'll be watching out for, and that is because Arm Birla Estates has secured booking value of around 500 crores for a project in Bengaluru. NCC has bagged an order worth almost 219 crores in the month of February. Piramal Enterprises will also be in focus because they have received GST demand order worth 1,502 crores from the Maharashtra Tax Authority. Dalmia Bharat will also be in focus. They are looking to add 6 million tons per annum cement capacity in Maharashtra as well as Karnataka. Indian Overseas Bank has received a GST liability demand of nearly 700 crores. And lastly, keep an eye out on Jeevan Small Finance Bank. They've completed sale of stressed loan portfolio with an outstanding of somewhere around 365 crores for 34 crores to an ARC.
Vamakshi, thanks a lot for that. And lastly, Mangalam joins in with cues from the FNO space. Mangalam, good morning. 22,800 first, 22,500 next, and now we are down to almost 22,000. What's the setup on the FNO side looking like?
Well, Friday was a session that bulls would like to forget. Actually, make that February was a month that bulls would like to forget. And if you look at the trades on Friday itself, a 400-point decline on the Nifty. The Nifty Bank was a relative outperformer by not falling as much. The mid-cap and the broader cap indices were always, weakened. And it was the IT pack that actually lowered the overall sentiment of the market. It was more global-led than anything else, down about 4% for the IT index itself. That was the top underperformer. Then the data came by in the evening, and that told you that the FII selling was close to 11,600 crores. Yes, the DIIs went ahead and bought 12,300 crores. But remember, these institutional volumes were also higher due to the MSCI rejig. So that is something that we need to keep an eye out on. But like I pointed out, the Nifty Bank was a relative outperformer by not falling as much. And that's exactly what, the data indicated as well. The Nifty open interest change on day one of the March series was up 7%. Nifty Bank not so much. And telling you that the FIs shorted more Nifty than Nifty Bank. Their net sell was close to around 2,500 crores in index futures of which 2,150 crores was directed towards the Nifty itself, whereas the Nifty Bank saw selling of just about 264 crores. The FIs, which were always on the back foot all of last couple of series, continued to remain that in index futures as well. They added about 14,000 shorts over and above their shorts which were at the start of the series, taking their overall net contracts to closer to 2 lakh once again. Minus 1.88 lakh is where their net exposure stands, with 15% long exposure. Now the question, where do we go from here? With the GIFT Nifty indicating a positive start, you have the Nifty 22,100 put extremely active, and on the way up the 22,200 call equally active as well. If you combine the premiums of these options, the option writers are expecting a range of 22,000 at the lower level to 22,350 at the upper level for the Nifty. The key to track would be the Nifty put-call ratio is closer to the lower end at 0.78. Typically, the market bottoms out between 0.65 to 0.7 for the put-call ratio. Let's see whether that happens or not. Were the markets to cross that 22,350 mark on the way up, we could see some short covering.
We look forward to that. The bulls will especially look forward to that. Mangalam, thanks a lot for that update. Take a short